What's up, everybody? My name is Robbie Greenfield, or Rob TG4, and this is your Crypto Catch Market Weekly Update for the week of July 22nd, 2024. Let's get into it. Getting started, we have your Bitcoin forecast, where CoinCodex puts our 5-day and 1-month projections at $77,000 and $88,200 respectively. Note that I have been tracking their forecast week over week, and there seems to be about a 7 to 10% discount as to where reality sits and their forecasts sit. So take that in mind when hearing these different projections. Second, we have a little bit of insight, or really not as much, from JP Morgan analysts. A lot of the analysts have said that the price action from last week to this week regarding Bitcoin wasn't sustainable. They did this on the basis of looking at the production price of Bitcoin, which was around, I believe, $47,000, and then also some loose correlations to commodities, specifically gold. And it's absolute crap. I'm absolutely sorry, but if you work at JP Morgan, you need to tell this team to step up their game. The main reason I say that is because we know that, albeit there are loose, very, very loose correlations between Bitcoin and gold, they are not directly correlated in the slightest. In fact, sometimes they're inversely correlated at that. We also know that there are other correlative factors that are much more attached to price action, namely Bitcoin ETC inflows, particularly in the past 6 months, where total net flows exceeded $17 billion, and net flows from this week started around $380 million. Bitcoin active addresses, which at the time of this recording is 733,000 active addresses, and this is about 52% down from Bitcoin's all-time high, which was 1.24 million in 2021, but 17% higher than early June. So we do actually see an increase in one of the highest correlated factors to Bitcoin price action, which is the number of active addresses on the Bitcoin network. And hopefully that will continue, particularly in the context of a potential Trump presidency or a potential Harris presidency that does involve crypto not being killed completely. Thirdly, we have Bitcoin fees. So Bitcoin fees are another factor that are directly correlated to Bitcoin price action after the BTC ETF flows and also the number of active addresses on the network. In particular, right now we see an average transaction fee of around $1.32 and a total TVL across BitVM, which are all the layer 2 blockchains that sit on top of the blockchain network, at around $1.2 billion. Now, why am I bringing this up? Because we can forecast what we think Bitcoin average transaction fees are going to be in the future based off of the forecasted transaction network use. And the more L2s we see built on Bitcoin, and particularly the more well-adopted ones, and the higher the TVL, likely we're going to see transaction fees on the core layer or Bitcoin network itself increase, and thus likely mean more or better price action for the future. So right now we're at 1.2 billion across all of the layer 2s as it is. And if we compare that to Solana, which is at around $5.38 billion, and Ethereum at around $60.63 billion, there is plenty of space for growth. I mean, guys, remember, Bitcoin is the granddaddy network. Solana and Ethereum would not exist without Bitcoin. And so it's very important to note that we see tremendous opportunity for Bitcoin transaction fees to increase significantly. Next up, we have your volatility index, that VIX. Of course, the VIX is one of the correlated factors to Bitcoin's price action. It has increased around 14% over the last week, from 12.71 to 14.91. And this is namely due to the increased geopolitical conflict in the Middle East, namely Israel's growing border conflict with Lebanon and the Houthis. And so if this conflict continues to exacerbate the situation abroad, and additionally, as many nations, particularly G7 nations, begin to rethink their relationships with China in the context of EVs, we could see a quickly shifting global order that will increase the VIX, hopefully not too much above that 30 score threshold, which really would hurt the crypto industry overall. But it is increasing, and we will pray really for the world as all of these things seem to be happening at once. Next up, we got the ETH ETF. So as you all know, the ETH ETF is now finally trading. It had about $107 million in net inflows on its first day and around $1 billion in trading volume, But of course, do not get sidetracked. This is not going to catapult ETH up into the stratosphere of 20,000 or 50,000 or 100,000 this year. It will likely have a very similar price action as we saw with Bitcoin, with an initial 10% dip, and then of course a resurgence that hopefully will go up, past the 50% mark as we've seen Bitcoin go this year. Additionally, we're going to start to see an increased correlation between ETH ETF inflows, just as we see BTC ETF inflows and ETH price action, just like we see with Bitcoin price action. And this will likely start to reorder what actually affects ETH's price, which up until this point has really been the network active addresses like Bitcoin, and of course, most importantly, TVL. And update number 3, Metaplanet's $1.2 million Bitcoin acquisition as a treasury reserve asset. Now guys, this is actually pretty freaking important. You may be thinking two things. One, what the hell is Metaplanet? And two, why do I care about $1.2 million? You just said that there was $107 million in ETH ETF inflows. And the reason why this is important is because it's showing a trend. And over the past few years, we've seen the Teslas, the MicroStrategies, the blocks, right? The riots all start to put Bitcoin on their balance sheet. Now, granted, those are very tech-forward companies, and we didn't really understand those situations as them leveraging Bitcoin as a hedge against the US dollar or otherwise. We just saw them as them betting on the crypto space, them being tech-forward, and many of them saw massive revenues from doing so. But this particular instance is a lot different. Metaplanet is an investment firm in Japan that is publicly listed in Tokyo, and they added Bitcoin not only as an investment vehicle, but as a treasury reserve asset. And this was namely to reduce or hedge against the yen's inflation when it comes to its interest rate versus the US dollar. To give you the TLDR, Japan has been struggling in terms of its population decline, in terms of stagnating wages, and most importantly, because the inflating yen. Now, the yen is very closely correlated with the US dollar, and there is one major issue. There's an imbalance of interest rates between the two currencies. Of course, in the United States, we have an interest rate above 5.5%, and this caused a massive shift of capital around 2 years ago from cryptocurrencies and stocks to US treasuries for a very stable and reliable yield. And the same is not happening in Japan. In fact, Japan's interest rate on the yen is 0.1%. So you can imagine that anyone that has access to a US-based savings account in Japan is going to move their capital from the yen to the US dollar. Even worse, all of Japan's imports are way more expensive than they used to be because they cost in US dollars. And this is making everything a lot more expensive, and it's making families start to rethink living in Japan altogether. So back to Metaplanet. Metaplanet is an investment firm that's listed on the Tokyo Stock Exchange, and it saw its stock increase 21% upon announcing that it made a $1.2 million investment into Bitcoin and leveraging it as a treasury reserve asset. It currently holds nearly 246 Bitcoin, around $15.5 million. Again, they did this to make Bitcoin a treasury reserve asset to hedge the yen given its association with the USD. This is one of the first instances that a publicly listed company in a foreign country has done this, and you could argue that the likes of Tesla, MicroStrategy, Block, Marathon Digital, and Riot Platforms are doing the same, each with massive amounts of Bitcoin, with Tesla at 10,500, MicroStrategy at 158,400 Bitcoin, Block at 8,027 Bitcoin, Marathon Digital Holdings at 13,726 Bitcoin, and Riot Platforms at 9,084 Bitcoin. This is setting a global precedent at what was long theorized, that Bitcoin is actually a hedge against USD inflation. If this catches trend in similarly USD-reliant markets, BTF institutional products could see hundreds of billions of dollars of inflows, not just the mere millions that we're seeing now. Such markets include Hong Kong with a $4.1 trillion USD stock market cap, the Panamanian Balboa or PAB, which is a high net worth tax haven, the Bahraini dinar with a $24 billion USD stock market cap, the Saudi Riyal with a $720 billion USD stock market cap, and finally, United Arab Emirates Dirham with a $148 billion USD stock market cap. because we know that the United States is in a perpetual debt and money expansion cycle, the USD will imminently weaken. But how different corporations in different countries, particularly large economies that are USD dependent, react is to be determined. But if they continue to react this way, the thought that a Bitcoin could be $1 million is actually a very realistic outcome. And that's it for your weekly market update. If you have any feedback for me, please leave a comment, and I appreciate your time. And until then, peace.